Hello and welcome to KYC or Know Your Company. I am Puneet Zaveri, and over the next half an hour or so, we'll put the focus on one key company that you don't want to miss. On the show today, we're speaking about IREDA. We will be joined with the management of the company as well. But before that, let's first look at what the company actually does. It is one of the key infrastructure financier companies in India, largely operates as one of the pure play financing companies essentially at this particular point of time. And we have seen that, and we will right now look at actually why are we focusing on IREDA before we move on to about the company. The first question, what are the sectors and the sub-sectors essentially that the company focuses on will drive the growth for the company in FY26? The second key question that we're posing for IREDA today is that, the cost of borrowing that has slightly inched up in this financing year, and we are seeing that the RBI has started a rate cut cycle. How will that put the pressure on NIMs? That'll be the other question that we will be asking the management today. The third one, what will the profitability run rate look like at this point of time? And finally, the last couple of questions, if we can load up that very quickly as well, will be on what will be the outlook of the renewable energy space that will determine the company essentially in terms of the disbursement growth as well for IREDA. But first, let's look at about the company and what we will be looking at for IREDA. Specifically, it is one of India's largest pure play green financing NBFCs. They focus on the renewable energy space, and that's almost 100% of its disbursement book. It provides a range of financial products and services for this particular sector. And now we'll talk about the multiple sectors that it has, financing outlook of. They do a lot of funding as well as financing for solar projects, hydropower, ethanol, as well as biogas. So it is within the renewable energy space as well, very well entrenched across products. When you look at the sectoral split, which was for the company for the first half of this fiscal year, you will see that some key sectors like solar thermal was roughly around 26%. That's right down at the bottom in blue. While sectors like ethanol as well as manufacturing and hydropower are starting to see this, the subsections increase as well. Hydropower is almost 11% for the company, wind is almost 16%, while the others are currently at about 34%. That is a multitude of sectors which we will talk about right now as well. But that's largely about the company. We'll now look at the other metrics as well which we have, which will be the rating parameters for the company. The first one will be essentially the income statement, which will be, of course, focusing on. Balance sheet will be the other key aspect that we'll be watching out for. Asset quality and what has been the GNP and NNPA ratio is the third key aspect. Operational metrics, which we will focus on, is the fourth one. And finally, return ratios, shareholding, street cred, as well as what is the valuation that it is currently trading at. But first, let's start with the income statement of the company. Now, when you look at the income statement, it has shown a very substantial increase in its interest income over the last 3 years, from roughly about 3,300 crores. It's up all the way up to 6,500 crores. We've also seen the profitability of the company almost double from 865 crores to almost 1,700 crores. The reason why you can see a neutral rating on this one is because we started to see the provisions increase for the company at this point of time, and especially going into the last 6 months, we've seen a substantial increase of that. So hence, we've given this a neutral rating on the income statement. When you move on to the balance sheet, that's the second key parameter that we're looking at. We've seen an increase, substantial increase in its loans as well. When you look at the last 3 years, from roughly around 46,000 crores at the end of FY23, it is substantially increased to almost 75,000 crores. And hence, we spoke about the company being one of the largest in the financing space for the renewable sector, and that's visible in the loans as well. Substantially, what's interesting is that the borrowing number has kept pace with the growth for disbursements. But what's also interesting is the net worth increase of the company. It's almost doubled from almost 5,935 crores all the way up to 10,200 crores. The net worth has also increased into the 6 months of FY26 and now hovers somewhere around the 12,000 crore mark. So it's important that the profits have been added to the net worth in this particular point of time. So this is a clear thumbs up from our side. So that's 2 metrics done. The third one, which we want to talk about, is asset quality. And here is where it gets slightly tricky at this point of time. We've seen the gross NPA numbers as well as the NNPA numbers as well, slightly starting to inch up, going into, the FY26 as well. So they have, while stabilized FY23 to FY25, for H2, the number has increased for both these metrics, and hence we've given this a neutral rating for now. We'll speak to the management of what they expect of IREDA as well as the asset quality, because compared to the same time last year as well, we have seen an increase in H2 of this year, which will be something to watch as well. Finally, in terms of operational metrics, we have seen the company at this point of time in terms of yields largely remaining stable at 10%. We've seen just a slight inch up in the yield of assets by roughly about 6 basis points. The borrowings also has largely remained stable at subpar of the 8% mark, while the interest spread has increased to 2.42% at that point in time. NIM has also increased at 3.2%. We're seeing for the banks that we will see starting to see some pressure on NIMs in this quarter, Q2 of FY26. That could be the fate for IREDA as well. So we will have to look at how the H2 happens for IREDA in terms of the NIMs, while the provision coverage ratio, and that's one of the key reasons why I've given this a neutral as well, because at 45.3% at the end of FY25, while it has improved, it is starting to have some effect because of the higher provisions and the higher gross and net NPA that has increased for the company. You are starting to see an impact on provision coverage ratio as well. So they will have to essentially provide more, and we will see that impact on the income statement over the next couple of quarters. So it is beautiful how all of these 3 key items are linked, and hence you can see that for income statement also we maintained a neutral rating, similar for the operational metrics as well. Return ratios for the company has largely been quite a decent performance for the company, roughly around 2.39% in terms of return of assets. That has improved from the last year, and so has the company's return on equity. So this, we've given this a thumbs up. ROE performance for most banks is hovering between 14 to 16% for the mid-tier ones. For banks like ICICI as well as HDFC, you are seeing a higher ROE, but they have kept pace, with the larger players. So this is a thumbs up from our side. The ROE performance has been quite complementary with the growth that the company has been seeing as well. Shareholding is the other one. Now, since it's a government-backed company, you do get strong stability from the government at this point of time. What's also interesting is you're seeing a reduction between September and March of this year, and that's largely because the company did a QIP of almost 2,000 crores. That will help the growth funding, and this is a key question we're going to pose to the management. But largely, the promoter holding has slightly come down to 71.5, almost 71.7%. Still a very strong number and strong parentage for the company at this time. So, we've seen a lot of retail investors participate in this particular IPO. And I'll just talk about the pricing in just a bit, but this is a clear thumbs up from our side. It's a strong parentage from the government that helps support the growth of the company as well. In terms of street credentials, that's the other one I want to talk about very quickly. You will see that over the last year or so, the share price performance have actually been quite weak. Down a percent, almost up a percentage point in a 1-year performance. But when you look at the other time frames, it has underperformed the Nifty as well as on the benchmark indices. So down 8% on a 6-monthly basis. On a year-to-date basis, it's actually down 30%. It's also important to note that this year we saw the impact on IREDA because of what the Gensol fiasco as well. They had lended money to the company to buy the vehicles, and since when that went bust, you saw a huge impact on IREDA at this point in time because they had funded some of the key aspects. While the matter is on the litigation now, there will be some key aspect which has impacted the street care at this point in time. But when you look at the performance, it's currently trading between 155 rupees per share. The IPO price was 31 rupees in November of 2023. So all those investors who got in saw their money rise almost 5 times from that particular metric. When you also look at the other ones where the issue actually opened at 50 rupees per share, so we've definitely seen investors making money, and hence you've seen the returns for them also coming through as well. When you look at the other metric, which is in terms of valuations as well, That's the other one I want to quickly point out as well, because currently trading at 24 times price to earnings, 3 to 3.5 times in terms of price to book is what it trades at. So we have seen, the stock is not cheap by any means. Being the largest financier, a lot of investors have shown confidence, and that has helped the company in its performance at this point of time as well. So, for IREDA, you do need some key growth metrics to talk about, as well as in terms of what could be the performance of the company. But valuations are slightly punchy, at least at this point of time as well. So, largely, when you look at all the metrics, and if we can pull that up on screen as well, in terms of the 8 metric that we've covered as well. That in terms of the income statement, we've given this a neutral rating. Similarly for asset quality as well as operation metrics, because a lot of it is linked for the company at this point of time. Balance sheet, we mentioned about the strong parentage that it has offered, so we've given this thumbs up. Return ratios, shareholdings is also a thumbs up. While the street credit performance, we mentioned the last underperformance of the last 1 year has hampered the stock price, so we've given this a thumbs up, thumbs down, and valuation largely at this point of time has been neutral. So if you can give us the total ratings, that comes at 5 out of 8 for IREDA, and that is our KYC rating for the company. We will be joined by the management very quickly as well, but before we do that, let's slip into a very short break at KYC, back more with the management to get us some key perspective on the business and the outlook that he's looking at going forward. Stay tuned. We put the focus on IREDA today. We just told you about the key metrics, but let's go across to our management now for the day. Mr. Pradeep Kumar Das, he's the the CMD of the company at IREDA. Mr. Das, firstly, a very good morning to you, and thanks so much for joining in. It's Puneet this side. We spoke about the company's growth metrics. Let me first start off with what you are currently seeing in terms of the power demand on the ground. Do you anticipate that over FY26, the last couple of quarters, and going into FY27, power demand will be substantially stronger to help your disbursement growth as well?
Yeah, very good morning and thank you. See, power demand going to continuously grow, because remember that we are determined to become developed economy by 2047. So for development, you require energy. And for energy, 90% energy to come from renewable energy if you are to reach to the net zero. So that culture of developing renewable and looking into alternate to fossil fuel, that is there. And as a result, 247 gigawatt of capacity installation has already happened in the country, out of which around 127 solar, 53 wind, 55 hydro, and 12 others. And if you see last year, around 29.6 gigawatt capacity addition had happened in IRE. Previously, in last 6 months, 27 gigawatt has already been added. So as long as the capacity installation will grow, our lending will grow. And if you see last 22 quarters, 5.5 years, we have been growing, and our loan book is growing in a CAGR of 27-28%. And if you see the half yearly, it is 31%. That means continuously our CAGR also growing, and which the business of loan book or disbursement we used to do in 1920, 2021 in a year, we are doing in a quarter nowadays. So against an annual sanction of 30,000 around, if you remember 5 years back when I joined, 20,000 and 22,000 like that, and now we have already achieved in half year 30,000 crores of sanction. 15,000 crores of disbursement. So this focus on renewable of Government of India, post the new government coming in power since 2014, it is there. And we don't have any doubt till at least 2030, the target what Government of India has set for 500 gigawatt of non-fossil, out of which 485 gigawatt of renewable, that is for sure going to be there. And the government has created a perfect ecosystem in which frequent stakeholders consultation by the ministry, as well as periodical interaction with the regulator and lender, that is happening. So since this sector is very fast changing and technology centric, faster decisions are taken many a times. And that, as a responsible lender since 38 years and being sole arm for almost 27, 28 years of MNRE,
right,
we have been playing that role. And to speed up the RE, particularly solar, SECI was brought into play. And the SECI, in addition to that, now they started doing other RE also.
Right. Mr. Das, so that point is quite clear. The power demand is strong. You have a strategic focus from the center since 2014. You're seeing that till 2030 as well, and that will eventually impact the disbursements in a positive manner. Got that point. How does that look at in terms of your asset quality? Because while a 31% loan growth has helped in terms of your loan book, now almost at 84,000 crores at the end of Q2, you have seen the GNP has actually increased as well in this point of time. For, till September, it's roughly at 3.97%. And while that has come down from what we saw at the level of March, it has actually inched up from the September time last year. So what is leading to that pressure in terms of asset quality for you?
The last quarter was an exception quarter in last 22 quarters, if you see. March 20, we had net NPA 7.18 and gross NPA 10 plus. And we brought it down to below 99. Okay, 24 and 25 it was 1.35. And June quarter only, two groups accounts that became bad, around 1,500 crore roughly. That one group, it is widely known in the market, that is Gensel Engineering. Not only we, around 17, 18 lenders were there. And post our result, this was the concern by the investor as well as most of the anchors in the channel. And during that period, we had assured that we will take fastest corrective actions. See, we as a lender, whatever best action from our side we can take. And wherever the borrower side irresponsibility, which is completely beyond the control or largely beyond the control, those things we have to manage. And probably here, if you see the interim report of SEBI, it was completely misgovernance by the promoter.
Yeah.
And just further input I'll add in these two accounts that will substantiate your query. In case of Gensel, the first company went to NCLT and got the NCLT application admitted in just 29 days.
Right.
And COC meeting has happened and the RP has taken majority of the assets.
Yeah.
And we are confident that vehicle will start running on the road very soon. And the other group which was happened, it was largely because of the Andhra government's PPA issue.
Yeah.
And that also we have sorted out a couple of accounts and we'll be in the process of settling more. And hopefully by December or March, those will be over also.
So, Mr. Das,
essentially... asking NPA, let me begin.
Yeah.
If you are asking NPA, in last 38 years, we have given 1.71 lakh crore. Our cumulative write-off is 135.
Yeah.
So NPA can happen, but write-off doesn't happen.
Yeah.
So the investor is concerned about write-off.
And that's something that you've been transparent about as well, because when you spoke to us post Q1, you did highlight this particular issue at that point of time as well. So got that point. How much is the total provision that you made for both of these accounts? And I'm sure that, once there is a resolution, whenever that happens, you will update us on that as well. But how much is the total provision? And you don't expect any more provisions from these two accounts specifically going into Q3. Is that correct?
See, as far as accounting provision is concerned, in the two account, you said that Andhra PPA based account, provision we have made long back, 1920. If you see in last quarter, when the NPA, it became NPA, but no further provisioning was made in that because we had sufficient provisioning. Because we are fully compliant of RBI guidelines as well as India's company. Expected credit loss methodology provisioning, what is mandated to us, we are sincerely following that.
And how much is that, Mr. Das, just for the benefit for viewers, for both those, how much is that provision?
Exact figure, I think 350 and odd. So that, again, I can tell you whatever figure, whether 350, 400, I don't remember exact figure, but those are mostly available in our published result because we are publishing quarterly basis full audited result. Even this yearly, we have submitted full results. The detail about these two accounts also we have published. That is available in public domain. Our concern, as you said, once this car starts running, and as I said, the other group already one account they have fully paid, and the remaining two accounts settlement company has agreed, and that is under process. Another 3-4 accounts resolution plan what they have it is in pipeline. That is going to, I think, we'll be taking proactive action. The work we have taken in the case of Gensel in the other NP assets also. You are asking provisioning, almost 60% provisioning has been done in those cases.
As you also recently raised QIP in this particular year as well, over 2,000 crores. what is the deployment of that, particular sum of amount that you raised?
See, any money we raise, I think within a couple of weeks it is getting depleted because we have that kind of fear. If you see our CRAR, which we prefer, I'll be happy if we can maintain at 20. But if you see, we are almost getting into 17, 18 because our net worth base is not that big and the sector is expecting much bigger disbursement from our side. So therefore, we keep on adding net worth through first GOI equity infusion by in 22 by 1,500 crore, then IPO, then QIP, then 5 years of continuous dividend exemption also we have taken. Because when we are having 31% of almost CAGR growth in loan book, and if you look at the NIM is also continuously improving. If I give you the 3 quarters figure, 3.27, then 3.6, and then 3.72, the last quarter, it is going up. And if you see the borrowing cost, it was 7.8 and then 7.61 and 7.4 now. So it is borrowing cost is going down. When this kind of performance is there, any investor, whether Government of India who is having 71% holding, certainly if they are allowing us for dividend exemption, we are plowing back a profit. That is enabling us to maintain a healthy CRAR, and that is enabling us to disburse higher amount. Suppose hypothetical, I am saying, if we pay the dividend of 500 crore,
right,
then another 3,700, 500 crores of disbursement we cannot do.
Yeah.
So therefore, all out measures have been taken to strengthen the equity and asset quality. So far, we have been very fortunate in last 22 quarter, except that last quarter what happened, and that is again, that has enabled us to clean up many of our old accounts also.
Right. My last question, Mr. Das, to you, because we are seeing you lend across a lot of sub-segments in the renewable energy space, and your solar thermal is almost 1/4 of the book. Wind is almost 12% and hydro is almost 10%, apart from the state utilities that you lend to them as well. Which segment do you expect in terms of growth for the next couple of quarters that investors should watch out for, which could have higher growth, in the meantime? Because we have seen substantial investments go by a lot of players in modules, in building cell capacities as well. Could you give us some, perspective apart from these as well? Because I could see in your presentation there are multiple, but just want to get some perspective on these three segments.
Yeah, if you see our loan book, the composition like 50% is vanilla IRE, that is traditional wind, solar, hydro, and 22% is emerging IRE, and 22% is in the state utilities space, and 4% is others. If you see the 247 gigawatt of India's capacity, there will find 127 is solar, 53 is wind, and 55 is hydro, and 12 are others. See, solar is growing very fast and faster. And if you see in solar space, there are many lenders available today. But in the emerging one, not much lenders are there. If you look at ethanol, we have lended almost 24% of India's capacity of ethanol in the country. Now, you are talking of module and cell. As of now, I think around 100 gigawatt of module manufacturing by August 2025 is there. And cell around 25 gigawatt by March 25 and wafer 2 gigawatt.
Right.
So our focus is, government's focus is to have Atmanirbhar Bharat so that we should not depend on place for our module. At least cell manufacturing is growing. So, and then way forward, we'll be looking into complete integration. That is wafer, polysilicon to wafer and wafer to ingot, and then cell and module.
Right.
And we being the responsible agency and sole arm of MNRE, we have to lend the entire gamut of RE. Even our basic job is also in the emerging RE, we have to handhold and disrupt until it gets matured, which we have done for wind, solar, hydro in the past, small hydro particularly.
Right, sure. Got that, Mr. Das, and thank you for joining in, giving us perspective across a bunch of topics for IREDA as well as for the industry. But with that, viewers, that's all the time that we have on this edition of KYC. Thanks so much for watching. A lot more action on the other side. Stay tuned.